What is the name of this episode? So this is an episode we never wanted to do. Your trade board for Popeye's Chicken and the stock QSR.
You ready for this?
The drive-through line is literally wrapping around the building.
What are you here for?
I bet it's a chicken sandwich.
The famous chicken sandwich.
I knew it.
So today on Dumb Money, we are deep diving into the worst trade in probably
Ever. We always said we would be totally transparent and we would share everything, the good and the bad. Because if you're not sharing the good and the bad, you're just lying. That's what this channel's about. It's about us sharing when we make money and us sharing when we lose money.
We lost a lot of money this time.
By the way, I hate you, Jordan, for how little money you lost on this trade. I hate you. Restaurant brands, QSR, Burger King, Impossible Whopper, Popeye's Chicken Sandwich, and the evil Tim Hortons that screwed up our trade. It's all going to be discussed today, and we're taking it full circle. We started this at Popeye's,
Yes.
and we're going to end it at Popeye's.
We're back now to where it all began.
We're back.
Your original thesis was that Popeyes was going crazy on social media.
This is our trade board for Restaurant Brands International. Popeyes launched its new fried chicken sandwich. The chicken wars of 2019 are trending globally. Earlier this month, Burger King started selling its plant-based Impossible Whopper. It's a game changer for the company. Next quarterly earnings release is scheduled for early November. With uncertain sales growth at Tim Hortons are risk factors with potential to impact this trade.
It was a double thesis, which is so rare.
Right.
You have a three-legged company, right? Between Popeyes, Burger King, and Tim Hortons. Three brands that Restaurant Brands owns. Popeyes releases the chicken sandwich.
It completely blew up. Social media was going crazy for it, and it was so successful they sold out within weeks.
Listen, I have spent the last 2 months doing channel checks, visiting Popeyes like every 3 to 4 days, and some Popeyes were doing 100% more business than they were a month before the chicken sandwich came back. Literally doubled their business. So we had high conviction that this was maybe the largest thing to ever happen to a fast food brand. Meanwhile, the sister company, Burger King, announces the Impossible Whopper, and it might have been the biggest thing that happened to Burger King in many, many, many years. We were right on both those calls.
And the earnings for those two brands were phenomenal.
Popeye same-store sales up 10% year over year. That literally never happens to a fast food company.
On a product that they ran out of.
Yeah, they only had this chicken sandwich available for 2 of the 12 weeks of the financial quarter.
But what it did is that they sold out every one that they were expecting to sell for the entire quarter.
Yes.
In 2 weeks.
So Burger King same-store sales were up 5%, which is the biggest same-store sales move they've had in 5 years. Popeye's biggest same-store sales move in 2 decades, okay? Problem was, well, there's a lot of problems. Let's get some chicken and we'll talk about what went wrong. So we got our analysis on Popeyes and Burger King right. We did the work, the data was correct, channel checks were correct, but when we made this trade board, we called it a medium conviction trade, not a high conviction trade. And one of the reasons why was because of Tim Hortons, which is actually the largest revenue driver for Restaurant Brands. And Tim Hortons was a bit of a question mark at the time.
It's one of the things we don't have a lot of visibility into because we're not in Canada.
There was nothing that I saw that signaled that Tim Hortons was going to have a disastrous quarter.
And their earnings have been pretty consistent
They have
historically.
been. But it was a risk factor. And this is a really important thing to understand because when we trade on one piece of information, or in this case, 2 pieces of information, we have to analyze everything and anything that could impede the trade. And we knew that Tim Hortons was a possible spoiler for this trade.
Just a couple weeks ago, we had an episode all about our trading philosophy and our kind of methodology. And the point number 5 that we made was you have to be aware of things outside of what you're thinking that could affect the trade.
And by the way, if you haven't seen that episode, definitely, if you want to dig in deeper on our methodology, absolutely watch that episode because we dive in deep. Our worst nightmare plus happened. So what we mean by that is not only did Tim Hortons come out with negative same-store sales, meaning that they sold less this quarter than they did in 2018 this quarter, but on top of that, almost right after we made the trade, 3G Capital, which is the private equity firm that owns 35% of Restaurant Brands, came out and unloaded a couple $2 billion of additional stock onto the market that they were liquidating out of nowhere. They had already liquidated some earlier in the quarter. That didn't help. That drove the stock down. At one point, we had doubled our money in this trade, remember?
Why did I not just set like a happiness threshold of double?
I don't believe in that. You know that, right?
I do, though.
We doubled our money in the trade.
And we let it ride.
Shortly after, Wendy's came out and said, we're going to throw a ton of money into breakfast at every Wendy's in the country, starting in Q1 of 2020. That is obviously really big competition for Burger King. So that was a big piece of negative news, not just for this company, but for McDonald's and everyone else. That drove the stock down more. Finally, earnings comes out.
McDonald's.
Oh yeah, McDonald's announces that they're going to start testing the Beyond Meat burger in Canada, which is potential competition to the Impossible Burger at Burger King. Now, we all knew that was going to happen at some point.
Yes.
I was hoping it wouldn't happen
during our
this
little trade
quarter,
window.
right? This
Exactly.
trade window. Every time one of these things happened, we said, you know what? It's a negative, but we think the positive still outweighs a negative. We're gonna go in deeper. We did. We went in deeper on the 3G news. When Wendy's announced all-day breakfast and the stock drop, we went in deeper. When McDonald's announced the Beyond Meat testing in Canada, which wasn't going very well, we went in deeper. Yep. And then the ultimate bad news. We still thought we were going to save the trade on earnings, and Restaurant Brands comes out with earnings.
But even with all of that, Popeye still killed it. Wendy's, McDonald's, none of that mattered. What actually happened was Canada.
No.
Canada invaded our trade.
Well-
Popeyes was up 10% year over year, same-store sales.
Which is
That is unheard of in
It
this
isn't.
industry.
It really is.
Going up 3% would have been a win.
absolutely. But Tim Hortons is, I think, roughly 60% of sales for the parent company, and they went down 1.5 points year over year. They went down 1.5% same-store sales year over year, which is really just a red flag. It's a red flag that this turnaround at Tim Hortons might not be going as well as the market anticipated it would, and that's really all that anyone needed to sell off Restaurant Brands. If Tim Hortons continues to go down that road of negative same-store sales, there's nothing that Popeyes or Burger King can do to help, quite honestly.
I was on the conference call, the big earnings call. I was on the call, you were on the call, did you dial in? I think the biggest red flag for me was not that Tim Hortons is down roughly 2%, but it's their answers to the questions about what's next for Tim Hortons.
Terrible.
They didn't
Absolutely
have
terrible.
any conviction, and I mean, they said, oh, well, we have a long-term strategy, we're gonna make this work, we're turning things around, everything's great, but they didn't.
Nothing specific.
They
They
didn't
gave nothing
seem like
specific.
they- yeah.
Every analyst is like, tell us how you're going to turn this around. And they just gave really generic, broad answers that were super disappointing and didn't build any confidence in their ability to turn Tim Hortons around, at least not in the next quarter. We essentially lost more or less all of our money on this trade, unless in the next couple weeks, who knows, we could get lucky.
I know you don't want to talk about how much you lost. I don't care. I'm going to share with you guys exactly what I lost. So I lost 96% of my investment. My total investment over multiple trades, all in $213,959. And it's now down to $9,000. 96% loss.
So I can share mine, which is not as bad.
Instead of buying options though, you bought stock.
Yeah, I bought stock, and so my average price was $75.84, and then I actually still hold the stock. It's sitting at 65.5 right now, so a 13% loss on that.
So I'll just leave it and say that I'm worse than both of you put together. This is the risk that you take when you invest in options, and it's medium or high conviction. And if you lose, you lose. That's just the way it is. Every time we make an investment, we know that there are risk factors that we cannot control. We cannot control if a big hedge fund or an institution decides to dump their shares. All the things that could have gone wrong went wrong this time. It is what it is. It's done. I'm moving on.
We were making a lot of investments in startup companies. I'm going to take some of these losses, and that's no longer going to be available to startup companies. That's really what happened. Because those are my super high risk. This was super high risk. I can't have this many high risk things going on. I had a loss in a high risk thing. Now I'm going to be a little more conservative and play with smaller amounts or less risky trades.
All right, you only have so much risk capital to deploy. So now what happens is we make smaller investments over a period of time. We get to a point where we have more risk capital again. If another good opportunity comes along, I'll go in on it again. I might not go in as heavy as this one until I can recoup some of those losses through other wins, smaller wins.
Yeah, so for me, I take risks with the startup companies that we invest in because I feel like I've got at least a fair playing field. But with stuff going on in the stock market, I feel like it's not a fair playing field. I feel feel like there are people out there that know way more than I know and that are buying information that I will never be able to see. And so I don't make outsized risk in the stock market. But at the end of the day, just because they have the information doesn't mean that the market's going to respond the way that they think it's going to respond, right?
They deploy strategies that you don't deploy. At the same time, you have information and strategies that they don't have and that they can't deploy. What they might have had was information on Tim Hortons. And if I can go back and do one thing differently on this trade, I knew Tim Hortons was a risk factor, but I probably didn't do a good enough job.
We downplayed it as a risk factor, and that was the mistake.
And let me give you an example. I found out that there was a restaurant brand annual meeting for their franchisees in Florida the week before earnings. I could have went to that meeting in Florida. I could have either posed as a franchisee, I'm sure I could have gotten in as a vendor. It can't be the hardest thing to get into, right?
The hotel lobby bar would have probably been a good place to get information about how Tim Hortons was performing. But we're talking about a 1.8% reduction in sales. Is that something that the typical store manager is going to recognize, that their store was
Yes,
down?
they all know exactly how much their store is down year over year. Absolutely. There are a lot of funds out there I know that poll franchisee owners to get that information through surveying. That's something that I didn't do and probably couldn't have done as easily. But there are ways for us to access that information. There are ways for us to, get an edge in other ways beyond what we were already doing. I got lazy for that trade. And there's always more that you can do. It's all about information. Everything that we do is about gathering information quicker and earlier than the rest of the market. So many people give up. When they take a big loss like this, you're not going to win every trade. That will never, ever happen. We'll be back.
Next week, actually. So make sure you subscribe, hit the like button, do all those things. We're Dumb Money. Thanks so much for watching.